This is Money Talks.
Hi, my name is Onyeka Eluehike, President CFA Society Nigeria. Join me and a host of other financial industry practitioners for Money Talks with CFA Society Nigeria.
Money Talks with CFA Society Nigeria. Let's talk about money. Hello everyone and welcome to Money Talks. Money Talks is brought to you by CFA Society Nigeria. Smart Uzechi is my name. You can call me Captain Smart. And today my guest on the program is Onyeka Eluehike. Onyeka is an investment professional with Persistent, which is a Pan-African investment firm focused on investing in the clean energy sector across Africa. He has over 6 years working experience in audit, advisory and investment roles with BDO Professional Services, PwC Nigeria and British International Investment. He's a graduate of accounting from Covenant University and is also an associate chartered accountant and emerged as the best overall candidate in his ICANN exams. I think that one deserves an applause because to write ICANN is not beans. Yeah. So to give you an idea that I have an Efiko in the house this evening, Onyeka is also a chartered financial analyst, CFA charter holder, and we're going to be discussing this evening financial goal setting in an inflationary environment. And no prizes for guessing that that's where we are as a country today. So we have in the studio Onyeka Eluehike. Onyeka, good evening and welcome to Money Talks.
Yeah, good evening, Captain Smart, and it's a pleasure to be here speaking with you.
So good to have you. So this evening we're discussing financial goal setting in an inflationary environment. Get ready to discuss with us when we return from this very short break. It's Money Talks. It's brought to you by CFA Society Nigeria. Money Talks with CFA Society Nigeria. Let's talk about money. Onyeka Eluehike is my guest on the program this evening, and financial goal setting in an inflationary environment is our subject of discussion here. Onyeka, any relations with Frank Onyeka, the Super Eagles player?
I wish, but unfortunately,
you look so much like him.
Oh wow! Thanks for the compliment.
Okay, let's get to talking finance.
Yeah.
The reason you're here, we've been hearing financial goals, but not many know what we talk about when we say financial goals.
Yeah.
So do us a favor, Onyeka. What are financial goals?
Okay.
And you also go ahead to tell us what they mean for individuals in different financial age or groups.
Okay. Yeah. Thank you very much for that question, Captain Smart, and thanks for setting the stage for the conversation. And talking about what are financial goals, and I think to start from probably the earliest conversation, what are goals in itself, right? So goals are basically achievements and milestones that any individual wants to achieve in any different sphere of his life, be it spiritual, be it career, be it physical, be it health-wise. In that same thinking, right, when you think about financial goals, they are specific big picture targets that an individual wants to achieve that guides how he spends money, how he saves money, and how he budgets money, right? So financial goals could be short-term, they could be medium-term, or they could be long-term. And I think drilling down into what are financial goals in itself, right? When you talk about goal setting, we talk about a basic parameter in which you set goals, which is goals should be smart. They should be specific, measurable, achievable, they should be relevant, and they should be time-bound. If one is setting a financial goal as well, they have to achieve these key metrics, right? So it's a vague statement to say, okay, in 2024, I want to just buy a car. That is in itself is not a financial goal, right? You could say, I want to maybe buy a so brand of car with this so budget by the end of the year or within 2 years, right? So that in itself is something, if it's achievable for you because you've set a budget, is time bound, so you can measure your progress over time, and it's something that you can hold yourself accountable to. So I'll probably say that is how you probably define financial goals. I think as much as possible they should be specific and meet those key metrics in terms of setting of goals. And then I think in terms of specifics, in terms of what financial goals helps one to do, is they help one to be disciplined in terms of how you spend money, right? So I'll probably give that kind of bigger, broad objective in terms of what financial goals are, right? Then talking specifically into age groups, right? In terms of mindset for financial goal setting, there's a mindset for different categories of people in different age brackets of financial goals. So typically they're not usually static, right? For example, you could be, I think you start from something as little as kids, right? And for most times, I think for little as kids, I think the discipline in financial goal setting can stem from the parents.
Yes.
And it could be little things such as helping them to frame their mindset in terms of understanding the benefit of what you call delayed gratification. You don't just give them everything they ask for you, right? You could tell them, okay, if you do so this, I will get you this. Why that in itself is not a financial goal, it helps them frame their mindset in terms of being a little bit uncomfortable with something in order to achieve, in quote, like a bigger goal. You could even start buying things such as long-term stocks for your kids and communicating that to them, right? From a personal example, I'm just quickly giving that, like I was basically fortunate because my dad was into the stock market, right? And even from an early age in my pre-teens, I was going to those stock markets and getting a bit of exposure there. And I got my first stock maybe when I was in pre-teens in my single digits. So I think it's important that the parents set the tone at this stage. You go to your 20s and your 30s, right? And I think this most times your financial goals at this stage of your life, right, should be investing long term as much as possible into long-term assets, right? Most likely in your 20s and 30s is very likely one has not achieved this in terms of his career peak, in terms of your earning capacity, but you have a long time horizon to invest. Then not necessarily like a rule of thumb, but there's a general thinking that maybe as much as 50 to 60% of your investment portfolio at this stage, right, should be into stocks, because you have a long time horizon to ride out the volatility rather than being exposed to risk averse bonds. And you think of maybe your 40s, your 50s, there's a thinking there that maybe you should start getting exposure to hard assets and maybe owning not necessarily in real estate, but start thinking about owning more assets and start diversifying probably towards bonds and thinking about maybe annuity and start thinking about retirement when you're going to basically stop working and think about cash flow generating assets at the end of the day. So I'll probably summarize to say there's always a frame of mindset as regards the different age profile.
Okay, that's one part of the subject this evening. You've taken financial goal setting out of the way. Let's talk about the inflationary part of it. Just 3 days ago, the National Bureau of Statistics came out with the numbers, and Nigeria, we're now doing 31.70% in inflation, and that's huge actually. Many Nigerians do not understand when you talk about inflation, especially those who are out there on the streets. They're saying, what is inflation? So I want you to explain to everybody in the language they will understand what is inflation and how does it affect one when they are talking about financial goal setting. Does inflation affect financial goal setting, and in what ways does it do that?
Thank you very much as well for that question, right? And I mean, obviously there are technical terms in terms of inflation, and I wouldn't necessarily say a simple way of understanding inflation is simply the average rise in the price of goods and services within in Nigeria's context, within a country. And what inflation basically does to you, it erodes what they call your purchasing power. Right. So basically your money loses value over time. Right. So what 100 naira could buy as of last year, it's not the same thing that the 100 naira can buy this year. So because the price has increased, that money has the fundamental value, right? The inherent fundamental value of that money has actually lost power. So that's what inflation basically does, right? And I'll probably summarize or simplify inflation within that context.
Okay. Just to remind you, listener, you can join the conversation anytime. You can call us on 0700-923-923-923. That's 0700-923-923-923. Or you can call the number 0814-0000-923. That is 0814-0000-923. Or you can also send us a message on WhatsApp 0817-313-6193. That's 0817-313-6193, including recording a voice note and send it to us to that number. If you have a question around financial goal setting in an inflationary environment, is your money losing value, or there's something you want Onyeka to explain to you about finances, you're welcome to do that. Okay, you can call 0814-0000-923. There's also 0818-444-0923. That's 0818-444-0923. Or just send us a WhatsApp message and that'll be fine. So Onyeka, the next stage we want to go to now is for you to tell us whether financial goals last a lifetime. You know, you've been talking about, like inflation said, the rise of prices of goods over a period of time in a particular country. These financial goals we're talking about, do they last a lifetime, or how often does one need to change their financial goals if they must change them?
Yeah. So do financial goals last a lifetime, right? And the simple answer to that is no, right? Because they're different thinking when you set financial goals. So there are different things that could happen, both adverse or both positive, right?
Yeah.
You set financial goals, changes in your income could happen, changes in expenses could happen, changes in priorities could happen, right? Changes in economic situations, such as the one that we've been having from a Nigeria context this year, could possibly happen that could inform a revision of your financial goal. And the larger thinking behind that is you have what you call long-term goals, right? For example, if you're in your 20s or 30s and you're starting to think long-term in terms of, oh, I want to maybe retire at 60, that's a long-term financial goal. That one necessarily, I don't think you need to be revising that or whatever, maybe like every month or every quarter, right? But you could probably review, are you in line, maybe every year, something like that. So I would say long-term financial goals, there's a general rule of thumb that probably review every year. But if you're setting a short-term financial goal, I want to maybe I want to build a house in the next 2-3 years. That's sort of like a short-term goal. There should be a little bit maybe more frequency. It could maybe be a quarter or something. You're reviewing the line of, for example, given inflation, the Nigeria context of where you're running a high inflation. Do you need to defer that goal? Do you need to save more? Do you need to revise your budget, right? So there's a lot of thinking behind that, right? In terms of financial goals don't generally last a lifetime. There are a lot of predicators or a lot of things that could come up in the middle of that might need revision of the financial goal. And like I said, it could be adverse or it could be positive.
Okay.
Yeah.
So somebody can now say, wow, so that's it. I'll take solace in the fact that nothing lasts forever. I mean, even if we're in a precarious situation as a country, it's difficult for everyone, even for the rich these days.
Yeah.
So somebody can say, since nothing lasts forever, this difficult time or season we're in is also not going to last forever. So things are going to get better. Inflation rates are going to come down. Prices of goods and services are also going to drop. So the person will be asking Onyeka, so would financial planning still be relevant at that time when things get better, as we're told it would?
I think that's a very important question, because I think there's a general thinking or mindset that you only set financial goals when things are bad, right? And it's just very natural to do that, right? But I think a better principle, a better thinking is even more important to set financial goals in times when, in quote, economic situations are better. Because like we probably set the tone in the previous conversation, nothing lasts
forever.
Yeah. So during times when, for example, maybe the economy is a lot better, there's inflation maybe has dropped, and people's income are probably rising or whatever, right? There's tendency that you can probably save better. You can probably invest more at that point in time. So every economy has cycles. There are booms, there are peaks, there are troughs, right? I think it's more important during the times of peak, right, to what's it called, to even set in a way probably more aggressive financial goals in terms of what you want to do with your money. There's a reason why even the richest people in the society have what you call wealth trust, and they think even in terms of intergenerational wealth and how they pass that wealth. So even the extremely rich people at the end of the day, they do set financial goals. So just using that as an example, or just that to explain the concept, right? Even during times of, in quotes, economic troughs, right, or when things are not really going well for the average house. So during times when things are going better for the average household, I think it's even more important at that point in time, right, to set aggressive financial goals in terms of how do you want to invest, how do you want to budget, and as much as possible, if you can still maintain your budget and not, in quotes, increase your expenses because things are going better, it's probably more prudent to do that.
You're listening to Money Talks, brought to you by CFA Society Nigeria. Onyeka Eluehike is my guest on the program, and this evening we're discussing financial goal setting in an inflationary environment. You can call the telephone number 0814 000923 in case you have questions about financial goal setting and how to navigate your finances in this very high inflationary season that we're in. Onyeka is happy to help out. Hello, good evening to you. Welcome to the program.
Good afternoon.
Thank you so much for calling. Tell us your name and where you're calling from.
Okay, my name is Mr. Angus. I'm calling from Erawo, in the Kushofa area.
Go ahead, sir.
Yes, please, I want to ask your guest here, Mr. Onyeka. Please, at this time now, let someone, at this hard time, can you advise somebody to invest, even if it's properly to meet up the daily needs of both children's school fees and save a little for that person's personal use? And also, at the end of this, I'm on air with you people. At the end, you can please give your number so that I'm in your office so that we can locate you. I would like you to be my mentor.
Thank you very much. Thank you so much. So times are hard. Where can people invest to get high returns so they can take care of their personal needs?
Yeah. Why? Obviously, I wouldn't.
Because when people are talking about investment, professionals like you are trying to encourage people to invest. When they get to the investment companies, the return on the investment are very, very discouraging, except a big money bag.
I probably might differ a little bit in terms of that, right? And why I say that is, even for the average person right now, I think there are investment vehicles that you can use to get attractive yields at the end of the day, right? I mean, the definition of attractive is obviously open for discussion, because
like 9%, 8% per annum.
I think they're even used right now, because what I basically mean by that is, in the backdrop of the high inflation that we've been experiencing, right, they're what you call treasury bills. These are risk-free instruments which government basically got borrowing from individuals, right, to invest in projects, and they're risk-free. Treasury, I think the last or previous auctions that have been done in terms of treasury bills, yields on treasury bills are averaging probably like about 20% per annum. And these are things that the average individual or household can have access to if you maybe go speak to your bank or whatever, right? And these are risk-free instruments, because per actual definition, the government is not going to default on that at the end of the day, right? So there is that, which is probably like one of the easiest ways to get access to sort of like fixed income product. But beyond that as well, right, there's a general thinking about, in quote, assets you can invest in a high inflationary environment, right? There's a general thinking normally that that real estate and commodities, these are some assets that tend to do well in an inflationary environment, right? Without going deep into the actual technicalities, right? But if you can have access to a real estate portfolio, right, there's every likelihood that during inflation is going to the cash flows that are being generated from that are going to do better, right? And then, I mean, if one manages his investment himself, or you outsource that if you just invest in a mutual fund, right? But during periods of high inflation as well, generally, in quote, just as what has happened with the CBN, right? They've increased the NPR, right, at the end of the day. So there's now an underlying thinking in terms of which company stocks might do better if they've increased interest rate to combat inflation. Bank stocks technically and theoretically do better in a high interest rate environment because bank lend money, and this is not any specific investment advice, or like I mentioned, right? So there's some bit of background thinking that might guide somebody in terms of where to put money during this period. But I think beyond that, from a broader perspective, I think there are accessible vehicles for the average household, right, to invest in, right? But then again, like I said, I mean, depends on definition of what is attractive. Maybe if you're looking for 50% per annum, I mean, I think it is necessary, right, to probably define that.
Okay, if we have time, I would like to ask you, those places he talked about. You mentioned like real estate. When people hear investment in real estate, the hairs on their head will just stand, and especially those who've got their fingers burnt. If we have time, I'll ask you about that. Let's talk about strategies now, Onyeka. The strategies that individuals can use, to adjust their financial goals, to account for the effect of this kind of economic environment that we find ourselves right now is very, very inflationary. When the numbers for February comes out, we're sure it's going to exceed 31.70%. I don't want to be a prophet of doom, but my head tells me that.
No, I agree with you. And I think, firstly, from a strategy point of view, right, there are two sides. So obviously, you have to look at what you're doing from the expense side, and you have to look at where you're putting money as well, right? If I start as regards where you're putting money, and I think there are some things that, call it, I won't necessarily say are no-brainers, things that possibly you should not do, right? I don't think is you could argue is penny wise pound foolish to leave quite a quantum of money in your bank account at this point in time, because in a high inflation environment, right, that money that is sitting there is losing value. You're probably even getting charges or whatever from that, right? So it's eating deep into the value of that money. Cash basically is losing money, right? So you could it's better for you probably to just leave, I call it like working capital money, right? Some minimal amount of funds that you probably need to do like day to day in that money, right? Instead of having large, even though cash is safe, so people just feel safe sometimes just seeing cash in their bank account, but it's losing value at the end of the day. So I'll probably say there's a bit of that thinking, and going towards what you're doing with your money. I probably mentioned some bit in terms of looking for smart assets, right, that can and be risk seeking, right, but then again manage your portfolio from an overall perspective. Not saying put all your money into high risk seeking vehicles or assets, right, but I probably say allocate probably a portfolio of that. That's probably what you're doing with your money from an investment point of view. From the expense side as well, right, I touched a bit equally on that. You would need to revise your financial goal. If somebody was budgeting to get married this year, it's not the same amount as if you're budgeting to get married. If you're budgeting to get married last year, things have changed, right? You need to sit down, reevaluate. Do I need to do this year? Can I push it next year? Or what's it called? Do I need to cut down on some things at the end of the day? So there's definitely a priority shift that has to come along with that. So I think those are like strategies that one can pragmatically think of, right, to adjust in terms of what you're doing from a savings point of view and what you're doing from an expense point of view during times like this.
Okay, we're choked for time now. I would appreciate if you can do this in a minute and a half. You have to tell us this. Those factors that people are going to be looking out for. Money is hard to come by. Nobody wants to make money now, invest it into a bottomless pit, or lose it. Wake up one morning, the investment house is shut down. They can't access their platforms on the internet. what do you think investors should be looking out for, when they want to invest in times like this?
I'll say focus on yield. Right, focus on yield and
yield.
Yeah, focus. What I mean,
returns.
You have to focus on returns, right? And it's important that you focus on returns, so you're not getting a negative value. What I mean by that, inflation, right? Inflation right now is over 20%.
But is it looking for high yield that people now run into problems of Ponzi schemes? They go to fake investment.
True, true that at the end of the day. That's why I probably had to balance that conversation with you definitely have to undertake research.
Yeah.
From your own perspective, and don't be too quick to jump on every bandwagon of interest of maybe 40 or to 50% per annum at the end of the day, right? Speak to people, speak to a financial advisor if possible, right? Before undertaking any investment. But also, I'll probably say evaluate the yield as much as possible. Like I mentioned before, treasury bills right now are probably like 21%, and these are safe assets that one can invest in at this point in time, right? But beyond that, I'll say focus on the yield at the end of the day, and look for smart vehicles. I think that you can put money in, but then again, be pragmatic within the overall context of your portfolio, so you don't just put everything there.
Thank you very much. Onyeka Eluehike has been my guest on the program Money Talks this evening, and we have been discussing financial goal setting in an inflationary environment. What an education this has been. Onyeka, thank you very much for coming.
Thank you.
We appreciate you. We're back.
Thank you very much, Captain Smart.
Yeah. Next time, please do find time to join us then. Remember what he has said? Look out for yield, but don't jump on just any bandwagon. Smart Uzechi is my name. Thank you for joining us on this episode of Money Talks, hosted by the CFA Society Nigeria. Stay connected with us on Instagram, Facebook, LinkedIn, X, and YouTube at CFA Society Nigeria. Follow us for more financial insight and updates. Keep a date with us next time.